Good afternoon, everyone. It's a pleasure to be here in front of so many colleagues, clients, partners, and all participants. My name's Costa Joannides, and I am the Global Head of Business Development at BlackBull Markets. Today, we're going to dwell in. The topic of our conversation today is navigating Forex volatility through strategic risk management. Now, this is a very big topic. I can speak for hours, even days on this specific topic, but we're going to try and master it in the next 15 minutes. Of course, what we want to examine is how we can use risk management strategies through BlackBull platforms to achieve the success that we're looking for. Market volatility. We're starting from the beginning. We need to start from the beginning. These two words, so very important. If I had to summarize what market volatility is in just a few words, I would say that it's sharp, sizable movements in tradable assets that our traders are trading on. Now, of course, there are opportunities with movements in market, but there are also a lot of risks. Now, why do these happen? What happens? As you can see here on the presentation, there's a number of reasons why these things happen. It could be because of economic indicators, GDP, inflation, unemployment rates. It could be geopolitical events, elections, conflicts, crises, wars. It could also be through central bank policies, market sentiment and speculation, as well as thousands and thousands of other things that affect the market. Now here at BlackBull Markets, we offer advanced tools, options, softwares for our clients to be able to feel confident and comfortable enough to understand when the market volatility will take place and take the relevant action. Okay, risk management, another two key very important words. Risk management, what is risk management? Again, let's summarize this. Risk management in just a few simple words is managing risk. Now, everything we do in life, there is risk, but how do we overcome this? For us to be able to overcome risk and increase our opportunities to success, we need to set specific rules in place that can help us. As you know, volatility affects the revenues of big corporations or individual traders. Anyone that's trading on the market will be influenced by market volatility. So it's important for us to be able to set our strategy, our risk management strategy correctly, and be able to kind of not overexpose ourselves, but be structured and ensure that we're taking the actions that we want correctly. Again, at BlackBull Markets, we offer a lot of tools, different account types, spreads, conditions for our clients to feel comfortable, confident, and ready to enter the market whenever they feel it is the correct time to do so. Now, there's certain principles to risk management. I like to name them the 3 R's, okay? So risk identification, risk assessment, and risk tolerance. Now, what are these things? Risk identification. We need to recognize that there is risk in everything we do when it comes to trading. Then we have risk assessment. There's a number of things that we can do. We can back test, we can stress test, we can do a variety of different things to identify, assess, and examine these risks. So it's not just about identifying it, it's also understanding. The more knowledge we have as individuals, the better it will be for us when it comes to applying our strategy and feeling confident to enter that market. Risk tolerance. All our colleagues before, they were speaking about emotions, they were speaking about psychology. Every single person here may think that they've got a specific tolerance towards risk, but when they enter that market and the big volatility happens, things change. That's the emotional factor. So how accepting are we of specific risks involved? We need to set our entry points, our exit points according to our psychology, to our feeling, to our acceptance of tolerance and risk. Now, very importantly, mitigation risk management strategies. So these are just a few ideas for you guys to utilize if you wanted to, or mix them up with your existing strategy. Try it, test it, understand what works for you, because your strategy has to be unique. It needs to be tailored to your requirements. Now, here you can see we have a budget-based approach. Basically, this implies that you set a specific budget in place when you are about to enter the market, whether it's about a trade or your trades. We also have position sizing. Now, I put an example here of the 1% rule. Now, this goes hand in hand with budget-based approach as well, because it implies that you set a specific risk limit towards your trading as well. So you select the percentage that you want to risk when it comes to entering the market. Profit and loss ratio, this is a very important metric. And when you guys are trading and when you do your assessment to understand when your profit and loss is from your trades, you then apply correctly your next move or the risk-reward ratio so that it can kind of reflect exactly the profit and loss ratio that you want to achieve. Price targets. Price targets are very essential when it comes to trading and to your risk management strategy as well. A lot of people, they enter the market, sometimes they get greedy, maybe they put their target price at a specific area and they feel confident that they're going to achieve it. The price goes there and they leave the position open. One very important thing that we need to do when it comes to risk management is being disciplined. So if you have your strategy, if you have your structure, make sure that you adhere to it, that you're truthful to it. Of course, we need to adapt it, but make sure that if you've got price targets and you've reached them, both for entry and exit points, then you move forward with them. Diversification. One very, very undervalued type of risk management strategy. Why? Everyone wants to go on the instruments that trade, the instruments that have high volatility, because that's where opportunities are. However, at BlackBull Markets, we do have 26,000 different tradable instruments for our clients to be able to choose from and trade and find the one that is reflecting their requirements as well. So I'm sure you've all heard of the saying, don't put all your eggs in one basket. Diversification exactly means that. Spread out the risk. Risk management strategy, be disciplined, follow it, and ensure that you're following the strategy that you place ahead. Leverage control. Leverage, of course, it offers the ability for you guys to have increased buying power. You can open more positions. You can enter the market where else you wouldn't normally be able to do so. But you need to be able to control because it's a double-edged sword as well. You want to be exposed in the market, but you need to control that exposure at the same time. Stop loss orders. Of course, stop loss, very, very important. I know a lot of traders that come to me and they're like, I don't want to place any stop loss. It's very important when it comes to your risk management strategy because you know exactly at what price you will close your position. You know exactly at what price you will exit from a position, and it kind of controls you, safeguards you against unwanted type of events or volatility. Technology-driven risk management. Now, this is a very, very important subject. So algorithmic trading, EA trading. Now, there's very big advantages when it comes to algorithmic trading. Why? Because, again, it removes that emotion from your trading. So what happens exactly? You create a strategy, you put the criteria that you want to put into this algo, and then it will execute, whether it's opening a position, closing a position, according to your requirements. Again, advantages. It removes the emotion, so if it reaches a price target that you've set, it will exit the market. If you have a price target for you to enter the market, then it will execute it according to your criteria as well. So it's always very important to be able to adapt, understand that certain things happen, and with algorithmic trading, we remove emotion. It can trade for longer hours, whereas before, as human beings, we don't have the ability to be in front of our platforms at all times. So it will execute your strategy according to your requirements. AI and machine learning, very, very important. And we live in an era where AI is kind of it's influencing all the industries that we kind of work in. So AI basically gives you the ability to see historical data, identify historical patterns a lot more easier than what a human brain can do. It can identify potential patterns of volatility before they even happen, and it can inform you as the trader to be able to take the relevant action and safeguard yourself, of course. Now, risk management platforms, it's very important that when it comes to our strategy, we ensure that we are, of course, collaborating with a broker that has that infrastructure that we require. So we need to have live tracking, we need to have alerts, we need to have that adaptation ability through the platforms provided to you so that you can execute the risk management strategy that you have. Now, at BlackBull Markets, we have, I would say, very fast execution. We have very strong liquidity, and we have a variety of different options, tools, software. When you log into our dashboard, you can see the whole array of different software and options that are available to you to choose from so that you can apply your risk management strategy correctly. You can analyze the market and understand a little bit more about how you can correctly apply this to your trading activity while you enjoy your trading journey. Forex risk management framework with BlackBull markets. So there's some key elements here that we need to discuss so that when we do go ahead and create our own framework as traders, we apply it. So first one, set clear objectives. Understated. This is very understated. Why? Because a lot of people go into the market, they try and create a strategy, but they don't set their objectives clearly. They need to be very decisive when they do this, and they need to be disciplined on the objectives that they set. Tailor your strategy, okay? So here at BlackBull Markets, we have a variety of different tools, like I said. When you log in, there's different softwares to our dashboard that you can utilize to tailor to your needs. Regular monitoring and adjustment. What good is it if we are able to anticipate that things are happening, but we use the same strategy we used 5 years ago? We need to be able to adjust. Now, there are a number of tools out there, whether it's AI, whether it's through BlackBull Markets platforms and offerings that you can adjust according to your requirements. Compliance and best practices. Every framework needs to ensure that it's operating under the correct setting with a regulatory, with the correct regulation from the firms and brokers that you choose to collaborate with. So, BlackBull Markets, your partner in risk management. Like I said, it's a bit of a repetition now. So we feel that at BlackBull Markets, we offer lightning speed, fast execution. We have strong liquidity. We have the necessary spreads, account types, and infrastructure that you need to be able to apply your strategy correctly. Like I said, the platforms, MT4, MT5, C-Trader, TradingView, all of these have a whole abundance of different risk management tools that you can utilize. All you need to do is log in, maybe visit our website, understand the educational material that exists there, the information that exists for you to be able to create a strategy and take the relevant action. Personalized support. One thing that we do pride ourselves at BlackBull Markets is that we ensure that our clients are treated with the highest level of professional service. And of course, we have multilingual individuals and support teams that work 24/7. And of course, regulatory compliance. It's what we finished the last slide on as well. At BlackBull Markets, we are regulated from our New Zealand operation, so the FMA. We have other regulations as well that can help you as a trader feel comfortable and confident when it comes to eliminating that fear that you have because of the high regulation that we have, and you can focus on what's important to you, trading. So, stay informed, set clear risk limits, leverage your expert tools, and continuous adaptation. These are things that we've discussed through this presentation, and these are very important factors that will determine how successful you can be when you apply your risk management strategy to the trading activity that you wish to conduct. So as a conclusion, volatility is a double-edged sword. Yes, it gives you opportunities, but it also increases risks when you don't apply a correct risk management strategy. And to do a correct risk management strategy, of course, you need to try things. You need to see what works for you. And then you can apply it, adjust it, and create it the way that you want. So as a final thought, by leveraging BlackBull Markets' advanced platforms, tools, and personalized support, traders can feel comfortable to turn Forex volatility into a strategic advantage for them. My name is Costa, Joannides, and thank you for your attention.